Okay, ladies and gentlemen, welcome back to the MATTA COVID-19 Bread and Butter series, episode 2 out of 3. And today we are going to be looking at the topic of banking, financing and leasing, specifically for the tourism industry. But before we get on with the panel session, just a quick note for those of you who attended the last session, which was on manpower and human resource. We have compiled a huge list of questions from the floor. Some of it was applicable, some of it not so, but we will be releasing very shortly to all attendees, both for this session and the last, a follow-up and possibly some answers to some of the questions that you have asked. Not only that, some of the questions that were posed also will be featured in our third series, which will focus on the recovery of tourism in Malaysia once the MCO is lifted. So once again, ladies and gentlemen, thank you for watching, and I'd like to introduce very briefly our panelists for today. We have with us, of course, the President of MATTA, Datuk Tan Kok Leang. Datuk Tan, I know you're on mute, but you can wave. Yeah, so that's a handsome gentleman there. Now, Datuk Tan holds a Master's in Tourism from the University of Toulouse, France, and he is a chartered accountant by training. Started his career in the travel industry with a leading tour operator based in Sabah in 1990. Datuk Tan is also a certified hotel administrator, and he is currently the director of Borneo Trails Tours and Travel, which he pioneered in the year 2005. The agency is currently now one of the leading inbound tour operators in Sabah and was awarded the Best Inbound Tour Operator category for Sabah 2009-2010, Best MICE Travel Agent 2013-2014, and Borneo Trails was also the winner of the Best Inbound Tour Operator Domestic Malaysia, awarded by Tourism Malaysia in 2014-2015. Datuk Tan also operates an eco-lodge known as Borneo Nature Lodge. If you haven't been there, it's an awesome place. I do suggest you go visit. And he was also awarded the Best Tourism Industry Leader 2018 under the Tourism Promotions Organization for Asia Pacific Cities. Next up, we also have with us Dr. Hafizali bin Iqbal Hussain, Associate Professor of Taylor University. Professor, could you just wave to us? Yep, that's a handsome gentleman there with the headphones. He holds a Doctorate of Philosophy in Finance from the University of Hull, United Kingdom, an MBA from the Multimedia University in Malaysia, Bachelor of Accounting Honours, USM, and of course multiple other qualifications, and this is just too long to say. Professionally, he is a chartered accountant of the Malaysian Institute of Accountants, and holds a certified qualification in Islamic finance, Islamic banking, and many others among them. Now, his current area of expertise is in finance, financial economics, and Islamic finance. And he's an associate professor at Taylor's Business School, Taylor's University, Malaysia. And his work has appeared in several peer-reviewed finance, management, education, and scientific journals. And he has, of course, presented at various conferences. Now, these are driven by his research interests, which include capital structure, non-financial firm borrowing, corporate governance and disclosures, financial development, Islamic finance, as well as banking efficiency and performance. So thank you, Doctor, for being on the panel. Now, last but not least, we have Mr. Ernest Kwong Kawa, Head Group SME Banking, Alliance Bank Malaysia Berhad, whom today is representing the Association of Banks in Malaysia. Now, Mr. Ernest Kwong joined Alliance Bank on the 10th of November 2006 as Head Remedial Management, before moving on to several other roles within the business banking segment. And he was appointed to his current role in late 2016 and oversees the SME banking operations at the bank. He has over 21 years experience in the SME and commercial segments, both locally and in international financial institutions. And before assuming his current role, he was instrumental in the revamp of the bank's financial programs, in which he led a team to assess the viability and relevance of SME programs at every business life stage. So Mr. Kwong also holds a Bachelor of Business Administration Honours, majoring in Finance from the University of Utara Malaysia. Mr. Kwong, very warm welcome to the show. Now, today's topic, in part 2 of this series, we explore how the COVID-19 pandemic is impacting the tourism industry financially and some of the unique challenges faced by industry stakeholders, specifically travel agencies, and both the benefits and shortcomings of the various financial stimuli being offered by the government and the private sector. Now, our key topic areas today include taking a look at the current tourism landscape in Malaysia, with a special focus on travel agents and tour operators, the unique business realities that apply to keeping a travel agency afloat when no income can be generated, and with a recovery horizon that is at least 12 months in the making. On the banking sector, we'll also be looking at what the banking industry is doing to play its part in preserving the economy, the pros and cons of business taking up the various loan packages currently being offered, and the difference between roles played by banks and leasing or financing companies, and some of the challenges faced by travel agencies when applying for loans during this time of crisis. And last but not least, the professor is going to give us a slightly bigger picture view as we delve into a macro view of how the financing aspect of the stimulus package will affect the tourism economy and travel agencies in the immediate to long term, and what generally lies in store for Malaysian tourism businesses within the next 1 to 3 years. So without further ado, I would actually like to pass this session over to the President of MATTA, Dr. Tan Kok Leang, to give us an overview of the current financial outlook for Malaysian travel agencies and tour operators. And some of the questions that will be posed to him are, have they been able to make use of the financial stimuli announced by the government? And what are some of the challenges that tour agencies and operators are facing on the ground? So Dr. Tan, over to you.
Thank you very much, Nigel, and of course the panelists. Welcome. As Nigel, you have said very clearly that the tourism industry have been very badly hit by this pandemic COVID-19. Of course, travel agents, tour operators, ground transportation, logistics, hotels, theme parks, tourist attractions, F&B outlets, cruise ships, and the aviation industry has been so badly hit. And for tourism, we are the first to be hit, as everybody knows, and we are the last going to be recover. And we expect slow recovery. Perhaps bookings will start to come in August, September, and we will start to see more bookings towards to recover the last quarter of this year, and perhaps stabilize by next year, June 2021. Having said that, it very much depends on the boosting confidence to travel. While we know that for the past years, travel has become an integral part of our lifestyle, but much depends on boosting confidence among travelers. Whatever we do, we must bear in mind that we need to boost the confidence of travelers that this is safe to travel. And this will involve new ways of traveling and embracing new culture with priority in health, precautions, and biosecurity procedures. Of course, we all know that we recorded practically zero sales for the month of April. I'm going to move on to May, June. So financially, we are really run dry. We got to pay our overheads and of course the payroll costs. However, it is interesting to note for the panelists that in the recent survey by MATTA, 69.5% of respondents said that they will not close shops. But I suspect not close shop means they will hibernate, and when the business recover properly next year, they'll be back on track. And talking about the government stimulus package, we have 3 stimulus package announced. In February, $20 billion ringgit Malaysia. In March, 250 billion ringgit Malaysia, and of course the latest one in April, 10 billion ringgit, especially geared for SMEs. While we welcome and grateful for these stimulus packages, it did not meet the industry expectations, simply because it's a one-size-fits-all relief for all industries, and we hope that the government will provide more specific financial relief. If you see the news, the Minister of Tourism herself said that 1 juta pekerja sektor pelancongan bakal hilang pekerjaan. This is from the minister. And you look at analysts, it says that 2 billion jobs of SME groups in the Urge Putrajaya for grade. And out of 2 million, 1 million is from the tourism industry. This is really frightening. And with the EPF non-waiver by the government have been so firm on the position. We are looking into landlords not giving the appropriate discounts. So we are facing a very difficult situation. And of course, the waste subsidy program, the employment retention program, MATTA have done a survey. 49% of respondents says it does not have. And obviously, due to qualifying criteria, terms, conditions, salary, staff retention period, and all this have made some of these packages are in a way hopeless to the organization and they cannot use it. Coming back to the topic for today, on the financing side, we are glad to note that there's basically three relief funds for SMEs, which is the special relief allocation of $5 billion, which I hope Ernest will later respond to that. Is short term, 1 million, max 3.5 interest, 6 months period, available up to end of this year. And of course, the agro facility allocation, I don't think any of us are in the agriculture line. And the third one is the SME automation and digitalization facilities. But looking at your business level now, you can have the best IT, the best system, but if there's no bookings, weak demand, you are unable to repay back the loan. So look into this SME automation. The government have been talking a lot about e-commerce, digitalization, but hey, look into your business. Whether do you need it at this current situation? So coming back, the main challenges, which based on feedbacks from members, the three main challenges that we have is, first, the association, we urge the government to monitor closely the disbursements of funds and the special relief. As of today, how many applicants by SME tourism companies have been approved? We want to know that. We want to know the ABM, the Association of Banks Malaysia, they have said that there's 1,300 applicants. On the 10th April, they have been approved. And we want to know again, how many of these 1,003 SME tourism enterprise have been approved, and is there any drawdown as of today? This is to improve our liquidity position. And number two, tourism players, they find it hard to qualify. If the banks choose to evaluate applicants based on traditional criteria with high obstacles, if you look back, after all, 80% of these loans disbursed, I believe, is guaranteed by CGC or SIPP. While with these stringent measures being taken, previous records, last 6 month bank statement, whether you have defaulted in the C3s, with this MCO lockdown, the latest accounts, and comparative with the last year performance, these are making it very, very difficult at this unprecedented time for approval. And we are getting quite a number of concerned members unable to get their loans approved. So this is something which I hope the panelists will also answer. And of course, the leasing companies, the leasing and credit companies. This has been one of the major issues. If you look through, when the government started with 6 months moratorium, 6 months moratorium for Bank Negara, the leasing companies do not fall under Bank Negara Malaysia purview. We have also responded to them. We have asked them. We have pleaded with them to look into compliance with even the Prime Minister have urged menyeru finance company organisasi yang credit to give the 6 months, but we have only 3 months and have to reapply again. We hope that the leasing and credit companies will look into this situation. And if you look into Indonesia, Presiden tegaskan bank dan leasing tunda tagihan kepada debitur selama 1 tahun. Even Indonesia have gone for 1 year with all the banks and leasing for compliance. But here we are, we have 6 months, and we have leasing companies 3 months and not cooperating fully with the directive of the government. So these are very serious issue. And if you look into the industry, currently there's 6,500 permits for excursion buses, small and big, and also 11,000 hire and drive permits. And what will be the current scenario? We can expect repossession by leasing companies by default, And if you don't restructure, there'll be a lot of number of tourism vehicles in the stockyard with book debts. We estimate more than $500 million of book debts. So what is the government going to do on this situation? They cannot just wash their hands. The Minister of Domestic Trade, what are you going to do? The Ministry of Local Housing and Government, what are you going to do where some of these leasing companies fall under this criteria? What are they going to do? They just cannot wash their hands off. They need to look into the public interest to look whether more serious actions can be taken or ask them to comply with cooperation. Nigel, is my time up? I think so. Okay, so this is the full, and we look at the situation is getting really cash flows issues. So the main point I want to ask the panelists are the banks make it simplify the procedures of the loans. Don't take months or weeks. Just get it 5 days. Get it approved. Simplify the procedures with MCO lockdown. Of course, the second take-home point is the leasing companies. Definitely, the government need to intervene at this situation. Thank you, Nigel.
Okay, thank you, Datuk Tan. So that was Datuk Tan with a quick overview on what's happening practically on the ground. And I believe that in the last couple of weeks, MATTA has also been inundated with questions, complaints, suggestions about, and there's been a lot of confusion in the market as to what the processes really are and how easy or difficult it may be to get loans or to get financial assistance. Now, last week there was a comment by Wan Shari from WSF Travel, and he said that in the comment, I quote ad lib, sekarang ini pihak Bank Negara memperkenalkan moratorium dan syarikat kredit tidak memberi kerjasama atas alasan mereka bukan bergerak di bawah arahan Bank Negara atau MOF. Ada antara syarikat kredit memberi kelonggaran dalam 2 hingga 3 bulan sahaja. Dengan keadaan yang sangat perit ini, saya percaya 80% atau lebih syarikat pengusaha bas akan bankrupt. Jika ekonomi sudah berangsur pulih, kita mungkin tidak dapat lihat bas-bas secara lagi jalan raya membawa pelancong. Now, this is just one of the many comments that have come through on the previous session, which is what we're looking at addressing today. And I think Mr. Ernest Kwong has some interesting insights for us. But just before we get there, we're just going to show you a very quick infographic that MATTA has released or will be releasing to you shortly. We did a survey among some of our members, travel agencies, both those who own vehicles and those who don't, inquiring as to the current status of their loan applications or credit problems with their credit and financing. Now, if you take a look at the infographic, you will see very clearly that at least half of the respondents have actually applied for financing in one way or another. And if you take a look at the top right, you will see that 38.3% of the respondents are still awaiting confirmation or pending approval for their loans. Now, if you hit down a little bit to the bottom, you'll also see that as far as the vehicles are concerned, most of the vehicle owners, the bulk of them own 5 vehicles or less, with those owning between 6 to 20 vehicles making up about 40% as well. The majority of the vehicles will be van and bus persiaran. And these are the vehicles that we are generally having problems with the credit or the financing companies, because apparently on the ground, it is very difficult to get loans from banks in order to purchase these sorts of vehicles. So with that, I'm going to move the session over to Mr. Ernest Kwong. Ernest, just give us an overview of the financial aid being offered by banks, especially to SMEs, and what are some of the challenges that banks are facing in giving out and approving loans, because we need the loans in a very short yet critical time frame. Is it any easier or harder for travel agencies to secure these loans, given that the banking sector has, correctly or incorrectly, historically classified the travel agencies as a high-risk industry segment? Ernest, over to you, please.
Okay, thanks, Nigel. Good afternoon, everyone. Okay, it's very, very interesting. Thanks, Dr. Tan. You give a lot of insight. Okay, first of all, let me maybe reiterate some of the point by Dr. Tan just now. I'm going to summarize that in actual fact, the government or even the central bank have come up two main aids, to the SME. Number one is in the form of moratorium. That is to ease the people cash flow. So this moratorium is 6 months. Now, I just want to share with everyone that the moratorium 6 months does not end here. Yeah, okay, means that in this 6 months you don't need to pay your term loans. Then you can have the saving to pay off any expenses that the company has. Okay, and on top of that, after the 6 months, if the business is still not revived or the business is not coming, please, I will encourage everyone, including us as Alliance Bank, we encourage all our SME to come to us and talk to us to restructure the facility. Means that we're going to extend the tenure even longer, okay, to in line with the repayment capacity, of the company. So this is one of the forms. So one is aid. There's a moratorium for the 6 months to help people ease the cash flow. Secondly, is in the form of funding. That's what mentioned by Dr. Tan. I think it's very clear. I think a lot of people know what type of the funding. In fact, in the market, in the market now, the government scheme that very suitable for the tourism is special relief fund. Okay, because SRF. Okay, you can also utilize AES or economy sector funds. And thirdly, actually, a lot of if for those company or tour travel that with the annual turnover of below 500,000, this fund is, we call it micro credit prihatin, and this fund is only offered by Bank Simpanan Nasional. Okay, now you can go to a Bank Simpanan Nasional website to have a look at it. One of the features that when I actually scroll to BSN is that they have one fund, in fact, up to 75,000. Okay, repayment is still 5 years, 5.5. Okay, and it's zero interest rate. Yeah, zero interest rate. So I think that part is helped a lot in terms of the smaller SME, micro. Maybe those that only own a few bars, and then after that, their yearly turnover is less than 500,000. So I will encourage people to apply for that. Okay, so there are two parts of it, as I mentioned. Now, come to the question is that what are the challenges the bank are facing? Now, I would say that during this period, one of the key challenges is that when we actually on the SRF fund is when we actually we process the new to the bank customers, because one of the things that the bank need to look is that at least we need to know what we call know your customer, KYC. We actually know that the business exists. Okay, and one of the things is that we can't establish that fact, but of course there are other ways that we want to establish it. Okay, for example, if this customer actually being referred to by our existing customer, we know that this person exists because we have a lot of call in. They say, I'm running this business, I want this fund. Okay, then we request for documents, but we do not know whether at the end of the day is the company operating or not. I think that is really a challenge. Second challenge is that now, I think this applies to all. Yeah, one of the criteria of this fund is that, or two main criteria of this fund is, number one, the company must be adversely affected. In this case, I think a lot of people are adversely affected. So I think a lot of SME are actually qualified, under the criteria number one. Criteria number two is viability. Now, why do we look at viability? Because at the end, this is a loan and it's not a grant. So we have to be, in the sense, responsible financing that make sure that we do not give you the loan. Okay, at the end of the day, 6 months, 8 months time, you still face difficult and you can't pay, and you actually increase your debt rather than managing your cash flow. That's point number two. So how do the bank actually look at the viability? Okay, actually in this period, some of the banks don't even look at debt service ratio. But when we look at viability, that's where some of the issues pop up. For example, if the company has been reporting losses for the past 3 years, okay, and maybe their secret record prior of the COVID-19 crisis, okay, they have a 3 month in arrears in their repayment. So these are the things that, okay, that will restrict the these will actually don't pass the criteria of viable. The company may not be viable, but do we stop that? No. Okay, we always encourage when we see these other things, we actually tell the customer, okay, tell us, okay, at the end, how do you repay back? You intend to pay back the loan. This means based on your cash flow, if you foresee 6 months down the road, your business will come back, and based on your turnover, you know how much expenses that you're going to pay, and with that, after your sales proceed, you deduct off your expenses, how much extra you have to meet the repayment. Now, this is also to help the entrepreneur or the SME to rethink, okay, and really sit down at this period to work out what were the cash flow. Because I believe truly business are badly affected, but it's time for people really to sit down and start to make a calculations. What will be the impact? Okay, what the action they can take, you know, and then they decide whether should I take the loan. Okay, I think that will be my comment. Okay, and Nigel, on your point that whether travel agency is a high risk sector. Now, not for Alliance Bank. Okay, no, we have never classified Alliance travel agency as a high risk. We have a lot of customers in travel agency. Yeah. Okay, now, but I believe that because based on my conversation with you yesterday, there are certain perspective, okay, like HP, because bus tour, a lot of bank actually is not the forte. For example, for Alliance Bank, we are not a strong in hire purchase facility, so we do not give financing on tour bus. Okay, but we give working capital for tour agents. Okay, agencies, you know, we give bank guarantee for them to give to the IATA, you know, and so on. Okay, all this facility, we provide facility to buy the shop house, you know, things like that. So we do. But for HP, a lot of banks are not their forte. So I also cannot comment. At the end is that it's depend on each other banks. Now, come to the in terms of, I just want to share that for example, Alliance Bank, we have today approved 722 cases, totaling about 500 million since the launch of the SRF funds, and out of which, okay, is latest as of last night, 80% of what we approved, okay, already allocated and approved by Bank Negara. It's just waiting for disbursement, okay, because there's certain documentation. So it proves that the bank are moving forward actually to disperse the fund, you know, but it is just that now, if really that first come, first serve, you know, and then during this MCO, capacity is an issue because we are not in full capacity. We have to rotate our staff to work. So the turnaround time is affected, truly to say, you know. But I believe all the banks are, all my peers in the banking industry for SME, they actually work day and night, you know, to come to get the loan out. In fact, I was one staff that under the branch is under MCO, you know, every day he pestering me was send a laptop to my house and give me VPN so I can key in case. Now, there is a good example. The staff are working, you know, despite that, because we want to protect our client. We want to protect the SME as well. Okay. And of course, we as an Alliance Bank, we also have quite a number of loans already dispersed, those that we managed to rush it up before the MCO, that they have signed the documents. That's why we can release the loan. Okay. But I foresee that for the next couple of weeks, more loans will get approved. And then most probably the fund will end soon, because when I read from the newspaper article from the Star today, you know, total bank already approved at 4.5 billion, and the fund is about 5 billion. So that is a positive note to all. Now, I want to end this, not to end this forum, okay, to end my sessions in the sense that I encourage everyone that if you have problem, talk to the bank. Okay, we are here to help. Our job is not to kill the business, yeah. Okay, after the 6-month moratorium, you calculate that, hey, whether can I go through? In layman language is that after deduct salary, after deduct my rental, after I manage to do all the things, this is what the income left for me. And how much do I need, okay, to go through? And with the loan repayment, it's going to kill me. But if I can reduce my loan repayment maybe to 10, 20%, we can do step up as well. Okay, you pay small amount, then you step up over the years when the business is better. So the bank are here to help. Okay, back to you, Nigel.
Okay, thank you, Ernest. I think Dr. Tan has a very hot question. He's been trying to raise his hands for the last couple of minutes here. Dr. Tan, over to you.
His hand.
Ernest,
Ernest. Okay, Dr. Tan, you got a question for me?
Yes, a number of the applicants, they say that since 80% is guaranteed by CGC and they still cannot get it approved, perhaps should we ask the government to guarantee 100%? That's my first question. Okay, CGC is guaranteed 80%, the SRF fund, but if the bank says that because of the poor performance the last few years and the rating system, so why not we ask the government for 100% CGC guaranteed? That's first question. Second question, after listening to you, I'm sure that Alliance Bank, we want to know how many percent out of this 500 million or whatever you have given up, how many applicants have you approved for tourism enterprises? Question 2, if you can. And the third one, I must applaud you. You know, there's a saying, it says that a banker, when it's sunshine, they give you umbrella. When it rains, they take off your umbrella. For Alliance Bank, I think this is not true. So I applaud you on that. Over to you now.
Thank you, Dr. Tan. Okay. Now, when the umbrella story, I in one of my speech or talk to a association last year or 2 years ago, I told you that bank did take back the umbrella, but the moment we take back, we give you a bigger one. We give you a bigger umbrella. Okay, so don't worry. We take back umbrella, we give you a bigger one. So okay, to answer your question whether the CGC should be given 100%, now it really depends on the government. But I think the whole purpose of it is whether 100% guaranteed by government or not. I think we have to look at the viability or continuity of the business. My personal view, because at the end of the day, the entrepreneur, as I want to emphasize again. So if you want to apply the loan, okay, then you got to make sure that you do have the ability to pay. We're actually helping also the entrepreneur, because at the end of the day, if you do not have the ability to pay, and you calculate already, I cannot go through, yet you want to increase the debt, then you have a further problem. So you got to make sure that you can go through. Yes, Tato.
One last question, because the panelists have not answered. What is your opinion on leasing and credit companies?
Okay. Now, of course, leasing and credit companies are not governed by the Central Bank of Malaysia. Okay, they are under a different law or on the ministry. So also depend on the structure, because some of the structure, if they have, if the leasing company or credit company give a term loan, then they are actually governed by the Ministry of Housing, local Ministry of Housing. But if they are not, they're basically like a normal company. So I think it's a way that, in my opinion, is that it depends on the company itself, yeah. Okay, because how strong is the credit company? Okay, because imagine same thing. If the credit company do not get the repayment, they also finance through loan to finance the end borrower, right? They're also getting a loan from somewhere, whether from bank, issue bond or whatever. They still need to pay. So that's why I think the capability of certain finance company may not be, if there are the smaller one, ability that, oh, I don't collect at all for the next 6 months or even 9 months, because they maybe their cash flow will be affected. This is my personal opinion. So it is, but they are, one thing, they are not regulated, so it's highly depend, on the company itself. But I believe a lot of bigger company like Leasing, they all have given the moratorium. You can check from the website. I think they are first few actually to grant the moratorium as well. But as I say, you always can request. No harm of requesting. Of course, if it's an auto moratorium, will be welcome. But all the customer actually are encouraged to talk to your banker or the leasing company on the situation. I mean, frankly speaking, no bank or credit company would like to repo your tour bus, because at the end, the staff cannot drive bus. Even they ask the staff, okay, I have 50 tour bus. Okay, you guys can take the bus and tomorrow fetch our staff to work. We don't have the license to drive the bus. So it's not their interest to repo as much as they want, right? So please, I will encourage all the tour agents to talk to the leasing company. Thank you, Dato'. Okay, back to you, Nigel.
Okay, thank you very much, Ernest. Ernest, just another quick question before we move on, because this is from the floor, before we move on to the professor. Two quick questions here regarding the SRF loan. Regarding the minimum requirements to apply. Does a company need to operate at least 3 years? What about those companies who have operated less than a year? That's the first one. And the second question is, are SRF loans subject to companies who buy or are covered by insurance too? Are these some of the minimum requirements that these companies must meet?
Okay, the first one, in terms of minimum of years of operations, is depend on each individual banks on their credit assessment. Okay, for us, Alliance Bank, our minimum requirements is 2 years. Okay, that you have to be in operations. Okay, particularly is because that I think we need certain time record. If you are just start, okay, for maybe half a year, your commitment may be not as that high. But if you are longer in the business, the more commitment you have. So this is what the bank look. But every bank have a different assessment, yeah. Okay. And then for the second question, you're saying the insurance. The insurance is definitely not compulsory. There's no compulsory of insurance. It's up to the individual want to cover the key man insurance. Means that during this period, if anything happen, at least that the shareholders do not need to bear the loan because it's being covered. So it's subject to each individual. It's not compulsory.
Okay, thank you, Ernest. Thank you.
Thank
so
you.
We've heard from Ernest Kwong, representing the Association of Banks Malaysia. If there are any other questions, just keep them coming because we still have quite a bit of time. And I believe some of the top questions on the Q&A, if you look at your screen, have already been addressed by Ernest. Nevertheless, if you have any new questions, do drop them to us. And if we can't answer them this session, we will actually look at getting some post-webinar answers distributed to you within the next coming couple of days. Now, we've taken a look at the situation on the ground, and we've also talked to the banks about the current financing situations, some of the challenges that loan seekers, particularly travel agencies and operators, are facing, and some of the answers that Ernest has given. Right now, we're going to take a bit of a shift, and we're going to look at a slightly more macro view of what the current stimulus packages means for the tourism industry at large. So for this, I'd like to introduce Dr. Hafizali, who is going to, Doctor, just we'd like to know what is your take on the effects of these readily available loans and what they're going to have on the business and the economy in the coming months ahead. Now, specifically for travel and tour operators who service customers and take commissions. Basically, what it means is we act as the middleman. We have a lot of liabilities where monies are actually paid on behalf of the customer, and depending on which products you actually sell, margins can actually be very lean. Now, are these loans a temporary shot in the arm, given the liabilities inherent in the nature of the business? And is this a sustainable solution to preserving these businesses until we reach that 12-month recovery horizon? So, Professor, over to you. Thank you.
Okay, right. Thank you. I think it's important to note, as a whole, the current stimulus package is aimed more towards stabilizing the economy. The focus was always on continuity of business and preventing job losses. Okay. So the financing options which are made available, if you think about it in the long run track, you can always observe that the rates are considered to be relatively cheap. Okay. So the idea is to preserve cash flow needs for the short run. Okay. And the allocation of funds was done based on the need to allow these firms to weather the impact from the MCO. When we talk about MCO, we have to bear in mind that it's not only Malaysia. It's on a global scale. So those in this particular industry, they are going to be, of course, looking at tourism from both international and domestic front as well. Okay, so the issue at the moment, based on what we can gather, it seems to be more towards the efficiency of the allocation of funds, where there seems to be pending cases as well as the turnaround time. Okay. Okay, so whether or not these are going to be temporary in nature would, of course, depend on the type of recovery you witness. Okay, if the national and to a large extent the global economy, because of the nature of business, see the swift recovery, then there would not be prolonged negativity surrounding business of travel agencies and tour operators. Okay. However, if the negativity persists, then you would find that these firms are going to face greater levels of uncertainty, and their cash flows are going to be under greater amounts of stress. Okay. So the major issue now is going to be about confidence. So a pandemic is always going to result in loss of investor as well as consumer confidence. People are no longer want or will no longer want to spend on holidays or leisure travel. In fact, most people would want to minimize business travel. It's going to affect the tourism sector. And in the early stages, if you recall, the government did provide an incentive to promote domestic tourism. Okay. So we do not expect international tourism to be or to soften, the demand to soften, then perhaps it's a good idea to switch the focus. Okay. However, this is probably the incentives are going to be probably taken up by nations towards the end of the year. Probably towards the second half of the year. Of course, that is the assumption that the pandemic remains under control and we have a gradual return of consumer confidence. Okay. Okay. So when we talk about financing options, we also have to bear in mind that these are stimulus packages or relief packages which have been brought about or during the MCO. Okay, if you um, observe the trend, the government has indicated that it's going to launch further measures, to boost economic recovery, okay, which could include measures to incentivize spending as well as investment in various sectors. So I believe that the tourism industry will also probably be looked at that point of time. Okay, so this is looking at the post MCO, post COVID era. Okay, this is going to provide a much needed boost in this particular sector. Okay, so at the moment we don't have any specific details on what exactly is going to be in that plan. That is the hints we are getting, given that we are probably coming near towards the end of the MCO, as the government has already drawn up SOPs for post-MCO practice, across different sectors. Okay. Of course, the sustainability of tourism sector will depend on how versatile firms are in responding to post-MCO and COVID era. Okay, we're going to have to relook at business models, and change is always going to be a necessity to an environment which requires behavioral change from consumers. Yeah, consumers are going to be changing the way they act, the way they spend. And we are going to observe changes such as social distancing. Yeah? Okay. So now the question is how the industry is going to consider this and how they can leverage technology, yeah, to ensure a safe and smooth experience, yeah, for customers. Yeah. So probably it's going to accelerate the adoption of IR 4.0, Industry 4.0, and we're going to see a lot more adoption of online reservations. And an interesting trend that has emerged out of China right now is that visitors who are allowed to book travel, they are all signed up for this app where they've been certified or verified as risk-free. Yeah, okay. So this is an option that I think we also need to consider, especially for to promote domestic and international tourism. Yeah, okay. So perhaps the most promising trend, yeah, coming out of this pandemic is the emergence of a niche group of consumers. Yeah, they are going to be certified to have immunity to COVID-19. Yeah, okay. I believe that's going to be an area that needs to be explored and catered to. Yeah. Okay. In addition, it's also useful to consider that because human beings are social animals, we get a bit agitated for being stuck at home for too long. Yeah, okay. So we have the need to go out and spend. Yeah, as soon as the MCO is lifted, which is why the government is planning a soft landing, yeah, rather than full scale easing. Yeah, okay. So it's important to know there's going to be a lot of pent up demand. So once confidence returns, we are going to see demand surge. Yeah, okay. As a whole, I think at the national level, we still expect private consumption to grow, although at a much slower rate. Yeah, compared to 2019. Yeah, so it's going to benefit the tourism sector as well to a large extent. Yeah, okay. So I think it's important for the people in this industry to plan, yeah, for the pickup of activity towards the later parts of the year. Yeah, okay. Okay, so there is also the potential for switching preference. Yeah, okay. So if I was supposed to travel internationally, or if I was going to go for a holiday abroad, probably I would switch my preference, yeah, towards probably traveling domestically. Yeah, so there's going to be a switching of preference by consumers. Yeah, so if international travel is deemed to be risky, nations may choose to replace this with domestic holidays. Yeah, okay. So it's going to be important to note that we're also going to be seeing large pickup to travel and holidays in areas or countries which are coping well, yeah, where there are fewer infections and have the proven ability to keep reinfection rates low. Yeah, so I think these are also things that need to be considered, yeah, from the industry point of view. Okay, so I mentioned that humans are social beings, and after being isolated for a long time, so we are desperate, yeah, to go out and binge on everything. Yeah? So we observed that in China post lockdown, we saw huge spending, yeah, by especially by those in the T20. Yeah, okay. So this was termed as revenge spending. Yeah, okay. So we also, I mean, personally, I believe there is also going to be a potential for revenge traveling. Yeah. So if I've been stuck at home for 2 to 3 months, what 10 weeks or 8 to 10 weeks odd, yeah, I'm going to want to travel sometime soon. Yeah. Okay. But I think now the question is, rather than whether this phenomenon will occur, is rather towards when does this occur? Yeah, so the industry needs to be ready for this. We're going to see potentially revenge spending or revenge travel. Yeah, okay. And so in addition to that, I think it's important for us to also observe, yeah, behavioral shifts, yeah, which are a social phenomenon. Yeah, okay. People change in groups. Yeah, we have herding behavior. Trends which have emerged, such as increased investment to facilitate work from home, are probably going to persist. Yeah, okay. So it's always a sticky business when it comes to human behavior. So once you get critical mass on one side, it's going to be difficult to move back to the other side. Yeah, okay. So it's an important factor that the industry needs to consider. Yeah, that given there's a shift during MCO or lockdowns on a global scale, how does the industry react towards this? Yeah, okay, people are changing the way they behave, the social phenomenon has changed, behavioral patterns have changed. How does the industry look at this? Yeah, I think that's a question that the industry need to consider as well. Yeah, okay. I think I've talked quite a bit on what to expect and what is going on at the moment. I'll pass back to you. Yeah, Nigel.
Okay, thank you, Professor. Now that was a very interesting bit of insight into future travel trends. In fact, I'm just going to shamelessly promote MATTA's next series right here because you said so. MATTA's actually done a consumer survey. And funnily enough, some of the things that you mentioned are actually quite spot on. And it's good to know that the Malaysian traveling habits are quite fixed, even post-COVID. However, we do actually see a very slow uptake because people, like you said, are still hesitant to travel. Now, this ties into the question which I asked earlier, Professor, if you could humor us and maybe give us a bit of your opinion or insight into the future based on the current policies that the government has done. Because you mentioned early on that agencies and businesses need to remodel for the future. They need to change the way they do business to cater to new niche trends and consumer behavioral patterns. But the underlying fear in the industry now is this. With the nature of the industry as it is today, many agencies are afraid that the current stimulus packages or the current financial aid given to them, coupled with some of the restrictions in other areas. For example, we saw a huge issue on manpower with the SMEs, how they're having trouble, trying very hard not to lay off their staff. But we're already seeing mass layoffs already beginning to happen. The industry is seeing hotels, and we've also heard of agencies that are closing down or looking to sell. At the very least, go into hibernation, right? So I think my question, Doctor, is if you had a suggestion or if you were given a chance to do things differently, what additional measures would you foresee the government potentially putting in place to ensure that these businesses are able to get back on their feet once the recovery happens, and like you said, have enough resources and manpower to pivot their business models to make use of the new trends? Doctor.
Thank you, Nigel. That's a very interesting question. Rather than think about how things could be done differently, I think the main issue here is about implementation. Yeah, how this stimulus package can be rolled out efficiently. Yeah, as I said a bit, I touched a bit about it. The main issue concerning any sector, especially the tourism sector, is about the turnaround time. How long does it take to obtain this financing, and what are the requirements? I think rather than what is the size of the package, it's about how it's being implemented. Yeah, of course, there's always room for improvement. And if you ask me what to expect in the future, as any crisis, especially one which is going to be concerning consumer spending, I think, as well as investment, yeah, in the tourism sector. Yeah, okay. I think the incentives are going to be focused on both sides. Yeah, okay. So the government is going to be studying how to incentivize consumer spending, as well as how they can promote investment from the private sector. Yeah, okay. So these are the two areas. If you were to ask me, I would imagine that is the main focus, yeah, where the government will be looking at. Yeah, okay. For example, if you look at, I talked a bit about behavioral patterns. Yeah, okay. To get consumers to spend more, the government automatically reduce everybody's EPF contribution. Yeah, for example, this is a behavioral act in play. Yeah? So if you are opted in by default, most of us would rather not fill in a form and send to our HR and opt out. Yeah? So this is the kind of things that the government are going to be looking at as how they can intervene in the market to raise the confidence level and get people to spend again. Yeah? Okay.
Okay, thank you, Professor. On that note, I think at some point MATTA did sent in the proposal, and I think the government did respond by giving special grants to or tax relief to Malaysians who traveled domestically. And I think we're just waiting for the MCO to end. And hopefully, like you said, Professor, that incentive will get more Malaysians traveling locally within the country. Now, before we move on to some of the Q&As, and we have another few more coming up, I'd like to open this section to the other panelists here. Do you have any questions for the professor or one another that you think may be pertinent to this issue?
Hi, Nigel, I've been looking at the Facebook of some of the comments by the members, especially also to Mr. Ernest. I think we have to be fair both sides to the members out there. I see some of your comments. Application rejected as director owing credit card $10 for 2 months. If you are a member, please pay up. Let's be fair. Please pay up. But for some of the comments, I see nonsense. Alliance Bank did not approve my thing. I think we need to properly sit down. The members, you need to. I know it's unprecedented, but please also do some compliance with the banks, cooperate with the banks. And likewise, I also wish that the banks out there would also cooperate and not make it so stringent. When I see some of the comments coming in, oh goodness me, like as if this forum, what we are talking is inaccurate. So I just want to get it right to both sides. The members, you need to play your part with the bankers to comply to the best of your ability, and also to Mr. Ernest, represent the banks, please also make some leeway and compromise. I remember 15 years ago when I went to a bank, the bankers called me for being a habitual defaulter and kicked me out from the bank. And further on that, to get my loans approved, I went for a course. It says how to understand your banker. I paid $600, and from there on, I begin to understand the banker and get quite a number of my loans approved. So to the members out there, I believe that there must be a compromise and a balance to cooperate together to move on our businesses to get the liquidity pumped into the market. Thank you.
Okay, thank you, Dr. Tan. Ernest, do you want to add anything to that at all?
Yeah. I think that if you see, there are a lot of people when you apply, you actually meet up a relationship managers that could be junior, okay, or things like that. Sometimes that the message sent could be wrong, okay, and we will actually look into it at the end of the day, because I mean, the banking is huge. It's being employed. I mean, if today you're saying relationship manager, we got about 1,000, maybe the whole banking industry, 2,000. So each individual that you approach, okay, some of the answer may not be correctly given as well. I would not deny that, okay? But we will actually look and remind, like sending up policy. Like for example, you say when your $10 credit card, I don't think this is a reason. Okay, this should not be a reason to reject the loan. And then in our internal policy, we don't even look at if there's a $10 outstanding credit card, even your secret is 3, 4, 5, 6, you know, it's an auto waiver, you know, that but we will inform the customer, hey, you got one credit card that you have not been settling for 12 months or 20 months, you know, and you keep on accumulating, you know. So these are the service that we provide to our customer, yeah. So of course, I want to emphasize again, that there are scenarios the bank will assess their certain criteria, because this is not for all. This is not auto approval for all, right? There is still a certain level of assessment. So when the assessments come, we do have a reason that if it's a loan rejected, I think I will encourage the members, okay, of the travel agency, ask, you know, why is my loan rejected? Okay, what is the reason? Okay, is it because, okay, for example, as I say, if your company are making loss for the last 3 years, Even I give you this loan, you still got to make a loss, right? And you still got to find some way to fund the losses, right? So it's no longer we're able to establish one of the key criteria, that is the viability. Okay, that is one of it. We also, in the sense, if you look at it, we also try to help. If we continue to have that at the end, you also cannot meet the repayment. As well, you think about what are the things that you can do to change the company, right? Rather than continue increasing the debt. Like your question to Dr. Hafiz. Dr. Hafiz is that, is it getting more liabilities is one of the good options. So people need to assess on it, Okay, Nigel?
Okay, thank you, Ernest. Now, we've got a couple of quick questions here, just so that we answer a few. Again, this is, I think most likely directed towards Ernest. Question 1, can one apply for the SRF loan with other banks if our own banks reject our request or application? The second question would be, again, on the SRF, is any collateral or insurance required, and is there any fee charged for that?
Okay. Question number 1 is that if you get rejected, you still can apply. You can still apply to other bank. The second option is that you can go to the CGC platform under IMSME, okay, and then apply through the channel. And then CGC will look at your profile and actually send to the best possible banks that will approve your application, that actually fit the criteria. You still can apply to other banks, and then secondly, you can go to CGC under the platform. Okay.
The second question, Dennis, was there any collateral or takaful required?
No collateral. Except for personal guarantee. You need to give the personal guarantee. Okay, minimally the personal guarantee.
Okay, thank you. Ernest, don't go off yet. So just rounding off, would we be right in saying that the loans, the chances of getting the loans, it's still a very viable option for most businesses, because if at first you don't succeed, quote, try again. You can actually go back to your banker, discuss things with them, and even present a plan that will show your banks that maybe you are going to be able to repay the loans in the future. Am I correct?
Yes, truly. Because the banker at the end is the same like when a friend approach you for a loan, right? A friend approach you for maybe 5,000. I mean, the first thing, or 10,000, 20,000, depending on the quantum. But the moment the quantum getting larger, we will ask how you're going to pay me back, right? Or when you're going to pay me back. You will say, okay, no, it's okay. Take donkey years. No, it won't happen, right? But your friend will try to, before you will ask a question, a proper friend will tell you what? Nigel, let me tell you my plan. Okay, you give me 50,000 now. By the 7th month, I will pay you, and how I'm going to pay you. He will tell you a plan. You feel much better, and you will give up the loan, right? Okay.
Okay, thanks, Ernest. Now I feel like
for personal loan, Nigel.
Well, now I feel like coming to you for a loan. I feel very good now. Okay, guys, I think that's mostly all the questions that we've got. A lot of the questions have actually been answered by the panelists at some point in time. But what we will be doing, for those of you who came in late or may not have caught some of the answers to these questions, we will be circulating a summary and to all the attendees for both the Bread and Butter Series 1 and 2. And hopefully this will help you do what you need to do and give you the information that you need. Now, I'm going to go through each of the panelists one by one, just to basically quickly sum up their takeaway points for you for this seminar. But before we do so, again, we will be looking at holding a third series, and this will be very, very interesting because we will be looking at how travel agencies, tour operators, and the tourism industry at large can look at recovery solutions and scenarios post-NCO and up to the 12-month horizon. How do you prepare for it? What are some of the actions you can take? What are some of the new trends you should be looking at? And hopefully we will be able to get some representatives or speakers from the various agencies and ministries to outline what they think and how they see the tourism industry in Malaysia moving forward. Now, without further ado, I'm going to give the mic back to Dr. Hafiz. Doctor, can you just give us a quick summary, your takeaway points for this session for all the viewers?
Right, sure, Nigel. I think going forward, the main concern, of a post-COVID era would probably see tour operators and travel agencies need to focus on the priorities of customers which are concerned about safety. I think that will be the key thing, and the emphasis will be on the quality. Okay, so factors that consumers will be looking for would include freedom, privacy, and hygiene. Okay, so the industry needs to respond to these needs in order to enhance the recovery. To a certain extent, we've already seen this popping up via the need of clean and safe environment, because we are observing now that hotels are going to be having their own certification as clean and safe. Okay, so in addition to that, I think we're going to witness a shift in digital experience, especially in these tour operators and travel agency and contactless environment or low touch experience. Okay, so I think those will be the key elements on the recovery towards the post-COVID-19 economy. Okay.
Thank you very much, Doctor. Ernest, over to you. Any quick takeaway points?
Okay. I would like to actually share with you guys a story. Okay. Now, if you are now in the family that will always watch from the drama, okay. Now the father is very sick, got a cancer, may not be able to work for the next 6 months or 12 months. The family got wife, 3 children. One is 19 years old, one is 8 years old, one is 6 years old. What do you think will happen to the family, right? Most probably the wife got to come out to work, okay? The son got to maybe stop the university and come up to work. And at the end, they need to protect the 8 years old and the 6 years old kid, to actually make sure they survive until the father can recover, okay, and things can get better. Exactly like these situations, okay. Now, things are there are a lot of uncertainty ahead, okay, but it's time of sacrificing, okay. In the organizations, whether the employers, the employees, both have to sit down and I think really talk about it and how to actually, to make sure the company will able to survive 6 months, and then to manage the company better. So why I want to share with this, because I want to actually to tell all the SME during this time, okay, you need to act. You need to actually talk to all your employee and give up a plan, okay, without actually you may not need to lay off, but you actually need to talk, need to discuss and how to actually manage your costs. Then, okay, you survive. And you also talk to your banker, like that family, they may need to talk to their bankers to say that my father is already sick. Okay, I don't have the income. Can you prolong? I'm coming out to work, but I can't pay you as much as as last time. So these are the things. So it's time for a lot of parties to actually need to sacrifice during this tough period and make sure that all of us can, all of the business can survive, until we can find a vaccine and things are getting better. Okay, Nigel?
Okay, Ernest, thanks for that story. For those of you who have kids, that's your bedtime story for tonight. Okay, finally, let's round it off with a final word from the President of MATTA, Dr. Tan. Over to you.
Thank you, Nigel. To Dr. Hafiz, thank you very much for your positive comments. We certainly hope that it will come true. To the Association of Bankers, Mr. Ernest Kwong, thank you. We hope that the commercial banks will continue to cooperate and work with the general public, because you are crucial for the economic fabric, and I'm sure that by releasing liquidity into the industry, it will basically develop and come out from this COVID-19 pandemic. for the members out there, consider the viability of your business. If you don't see any future bookings coming for the next 6 to 12 months, whether you're in the inbound, outbound, ground transportation, air ticketing, Umrah, Hajj businesses, look into your segment, whether you are going to have future bookings. If it's viable, yes, go for the loan, apply. If you cannot get it approved, look for Mr. Ernest, he will get it done for you. But you have to look into the business, because we know that the group business size will come down because of social distancing. FITs will probably increase. Whether there will be a surge in demand, time will tell. So if your business, you don't see any, I probably recommend, it's up to you. Maybe you can hive it down, scale it down, and you come back when the business picks up. Of course, not forgetting the DG of Health Ministry on April 23rd hinted that travel bans may continue to be enforced even after the movement control is lifted. This will be another dampen to our industry. So these are quite a number of external factors that the members should really seriously consider whether to go for the loan or to see you need to restructure your business. Of course, we also look into the leasing and credit companies. Basically, I think from the public point of view, these definitely need to be regulated under closer supervision by the Ministry of Domestic Trade or even the Ministry of Finance. I think through crisis, we can see that these leasing companies and credit companies have been left unregulated in this industry. Of course, the last point, which since we are talking about finance, the threshold of companies' inability to pay debts, we believe that it should be raised from $50,000 to perhaps $100,000 during these severe economic conditions to minimize winding up petitions by creditors. Of course, the association, we should also be proposing to the relevant ministry, which in this case, the Companies Act, the Ministry of Domestic Trade, to ensure that a lot of companies will not be wind up during this time of economic crisis. Thank you, Nigel.
Okay, so thank you once again to all our panelists, Dr. Hafiz from Taylor's University, Sir Ernest Kwong from Alliance representing the Association of Banks Malaysia, and of course Datuk Tan for giving us an on-ground scenario. Now, before we finish off, just to let you know again, the infographics that we displayed early on, as well as some of the question and answers from the previous series, and indeed this coming series, will be prepared for you and all attendees. You will receive an email with instructions on how to download this kit. And if you have not registered for this via Zoom, you're on Facebook, simply drop us a line at www.matta.org.my and we will put you on the list. So ladies and gents, thank you again for attending this Bread and Butter series by MATTA. We look forward to seeing you series number 3 sometime next week, and we will let you know when that is happening. So thank you again. Have a good day. Stay safe.
Okay, Dato', thanks for getting me in. So we will catch up together for dinner or anything after the MCO lah, Dato'?
Yeah. Okay, thanks.
Let me buy you a dinner so we can talk anything that I mean, after the MCO, I still can see how we can help your members, yeah?
Yeah, please release the loan, okay? Okay, bye-bye.
Okay, thank you very much.
Bye-bye.